And they're off. Ice Juice trading under the symbol IceJ, already pushing north of 20.
Closing price, $3.89.
This is one busted-ass IPO. Let's crack open that bottle.
Let's talk about two things. Number one, how an IPO in investment banking works. And number two, how to decide if you should invest in an IPO and how to do research on an IPO before investing. And we'll do this by analyzing the fictitious controversial company called Ice Juice and the IPO of Ice Juice from the 11th episode of Billion Season 2, based on my work experience at Goldman Sachs in New York City and based on my work experience at the top hedge funds in the world. Now, please like, comment, and subscribe and stick around, because at the end of this video, I'm going to grade the episode for Wall Street realism with a buy, hold, or sell rating. Now, investment banks help their clients raise a lot of money, and I'll explain exactly how in this video. Now, let's assume that Ice Juice wants to raise $9.6 billion of cash, and the use of proceeds will be to open many more pressed juice stores as fast as possible so that they have a first mover advantage in many different markets. Now, there's no way that companies can raise that much money without hiring an investment bank. And so companies can raise a lot of money by hiring an investment bank to either raise money for an IPO, like what Morgan Stanley did with Facebook here in their 2012 IPO, or what they can do is companies can issue debt like a bond, like what JP Morgan did in 1945 for this United States government war savings bond. So Ice Juice can either have investment bankers do a $9.6 billion debt raise, meaning by issuing this bond here, or what they can do is the investment banks can raise $9.6 billion for Ice Juice by doing an IPO, meaning selling equity, meaning go public. Now, equity means ownership, and the investment bankers, meaning these companies here, including the fictitious MHS or Morgan Sachs, recommends raising equity and not debt, because like many risky high growth companies, Ice Juice, this company here, is not profitable yet. And the interest rate on issuing debt is way too high for Ice Juice to issue a bond. Also, we want to issue equity, meaning do the IPO, because the board members of Ice Juice include venture capital investors, and they want to harvest or profit from their investment in Ice Juice. And venture capitalists often call their investment banking buddies to take the company that they own part of public when revenue growth starts to decelerate. And another reason that Ice Juice wants to do an IPO is because the employees of Ice Juice can sell their shares in an IPO. Plus, if the company is public, then it can give shares, meaning options, to employees over time that they can only cash every 4 years. And options are like golden handcuffs to keep employees from quitting. Now, in a moment, we will do the $9.6 billion massive IPO together for Ice Juice. Now, here are the 10 biggest IPOs of all time. And I worked on the 4th largest IPO, meaning NTT Docomo or NTT Mobile, when I was a grunt at Goldman Sachs in 1998. And here's the tombstone right here. And inside this tombstone is the S1, which I will explain in this video when we talk about the Ice Juice IPO and S1 document in a lot of detail. Not to brag, but I was the best photocopier ever on this deal. Now, the S1 in here, this S1 document, is similar to the Ice Juice S1 IPO document that investment bankers make for IPOs that we'll discuss in a second. Now, hedge fund billionaire Bobby Axelrod hates District Attorney Chuck Rhodes, who owns a lot of shares in Ice Juice. And here's how Bobby finds out that Chuck Rhodes is about to make a fortune on the Ice Juice IPO.
What happened? They shoot Sonny on the causeway? Otherwise, spit it the out.
I just hung up with Patriot Bank. After a hot roadshow, they are taking out the Ice Juice IPO. Press is getting loaded up with the story as we speak.
So Bobby's sidekick Wags mentioned that he spoke to Patriot about the IPO and the roadshow. And I'll explain the roadshow in a second, but Patriot is one of the investment banks that is working on the Ice Juice IPO, as we can see here on the cover of the Ice Juice S1. Now, when a company files to go public, they hire investment bankers to do the IPO. And the investment banks create a prospectus, which is also called an S1, like this document here, which all investors can access at the exact same time at sec.gov. Now, when Facebook, or Meta as they call it now, went public back in 2012, I participated as a VC and later as a hedge fund investor. But Facebook had to file this S1, and all firms going public must issue an S1 document like this. In fact, the way that you can find out if a company is going public is by going to sec.gov. And if we type the company name, meaning Meta, the new name for Facebook, then you can look for a document called the S1, which looks like this. And the S1 is written by investment bankers and lawyers, and it lists all the risks with the company, as well as a thorough discussion of the management team, financials, the business model, and so much more. And usually about 6 months after the S1 is filed here on sec.gov, then the company goes public. Why 6 months? Well, partially because it takes a while for the investment bankers to sell the shares in the IPO to the right investors, which is called book building, which we will come back to in a second. Now, later on in this video, we will also find out why Ice Juice was a broken IPO. But first, let's take a quick look at the S1 document for Ice Juice, and please always read the S1 before ever investing in an IPO. Why? Because all the risks are mentioned. For example, in my hands is the Meta S1 from 2012, and in it, it stated that a big risk was that Facebook did not have a very good mobile strategy then, which was one of the reasons the Meta IPO crashed initially. Now, the Ice Juice S1 is very similar to other S1s that you will look at. And you'll see that there are unfinished parts on the cover of this 150-page document. And this is normal because updated versions of this document are created by the time the IPO occurs. And they are labeled with the letter A, as you can see here, meaning amended. Okay, the amended version of the IPO, like we see with Meta here. And always read the most updated amended S1 when deciding whether or not to invest in an IPO. Now, let's assume that this here is the latest version of the Ice Juice S1. And 6 months from now, Ice Juice will go public. Now, at the top of the S1, we have a disclosure in red. Then we see here that Ice Juice is offering 1 billion shares of Class A common stock. Now, the company defines the difference between Class A and Class B shares. And in this case, Class A shareholders get 1 vote per share that they own, and Class B shareholders get 10 votes per share. And this is set up this way so that the senior company executives and the board members and early investors like VCs have more voting power. For example, here on the cover of the Meta IPO, we see that Zuckerberg got an unheard of 55.8% of the voting rights after the Meta IPO was done. Now, in this Ice Juice IPO, there's 1 billion shares as part of this IPO. And here at the top, we see that 600 new shares are being created and sold by the company. And 400,000 shares are existing shares owned by venture capital firms and employees of Ice Juice. Now, in terms of the pricing of this IPO, the investment bankers think it'll be between $15 and $17 per share, depending on the demand from investors. So if the IPO gets priced at the midpoint of the $15 to $17 range, meaning $16 per share, then the company gets $9.6 billion in cash after fees, because 600 million new shares times $16 is $9.6 billion. So of the 1 billion shares in this IPO, 600 million are primary shares, meaning new shares, and 400 million are secondary shares, meaning shares owned by venture capitalists and Ice Juice employees like Ira, who we see here standing, and his friends and family like Chuck Rhodes and his dad, who is sitting here. Now, friends and family can also participate in IPOs.
I'm gonna get an Ice Juice from the fridge. You want one?
Don't get high on your own supply. No, I'll not be drinking any of that nonsense. Bring me something with some alcohol in it.
Now, Ira, his friends and family, as well as employees and venture capital firms, own 400 million of the secondary shares. And the SEC rule is that they're not allowed to sell their secondary shares on the day of the IPO because there's what's called a 6-month lockup. Now, if the 6-month lockup rule did not exist, then most IPOs would likely fall a lot on day one. So they cannot sell until 6 months after the IPO. And this explains why some IPOs go down a lot after 6 months. And this means that insiders like the CEO, Ira, should never calculate their net worth on day one of the IPO.
Holy I'm worth $125 million.
Yeah, you may well be soon enough, but don't allow yourself to feel it just yet. That clouds the thinking at the exact moment when you need to be clear-headed.
Accurate. His net worth may change a lot in 6 months after the IPO. Now, insiders often sell a lot of the shares after 6 months because many employees have 99% or higher of their net worth in the stock. And as a venture capitalist, I would always sell more than 90% of the shares in IPOs that I participated in 6 months after the IPO, as it was always a massive percent of my net worth. However, as an investor, you should be very worried if the employees of the company sell too many shares after 6 months from a behavioral finance perspective. Now, buy-side firms, meaning hedge funds and mutual funds, that buy the 600 million shares of the Ice Juice IPO are allowed to sell their shares that they bought on the first day of the IPO anytime they want to. And we're almost done with the cover of this S1 here. Next up, we see that the stock is on the NASDAQ in this hypothetical case, and the ticker is IceJ. And right here, we see how much money Ice Juice will get after the IPO is done. It's blank right here because the IPO has not yet taken place. And we don't know where the stock will price in terms of the $15 to $17 per share amount. Now, we also see here how much the investment bankers will make on the deal, meaning the underwriters. And once the number is determined, we will see it written right here. And this can be around 2 or 3% of the deal. And this percent can be higher with smaller deals. And just for fun, on this deal, let's assume that the fee is 2.5% of $9.6 billion, meaning $240 million in investment banking fees. Now it makes sense why so many people want to be investment bankers, because bankers make their firms a lot of money and they get massive bonuses too. In fact, other departments of a sell-side investment firm, like sales and trading and equity research, might not be that profitable at all for investment banks. But we really need trading floors, as the salespeople on the trading floor sell the deal to their buy-side clients, meaning hedge funds and mutual funds. Next up, we have the names here of the investment banks doing the IPO. The bigger the IPO, usually the more investment banks are involved. Now, whoever is top left usually leads the deal. Then we got top right, who is second on the deal. And then the smaller companies down here, like Patriot Bank, where Bobby and Wags heard about the IPO from, are listed there. Why are there so many investment banks working on this IPO? Because it's a very, very large deal. And the investment banks on this syndicate have to distribute the shares to customers all over the world. Now we have a German bank here, a Canadian bank, and a Japanese investment bank on this syndicate for additional international distribution. Now, another reason why there's so many investment banks on this syndicate is we want these investment banks to compete with each other in order to find the best suited long-term investors of Ice Juice shares. And the investment banks shown here that add more value in the IPO process make more money. And this co-opetition strategy works when it comes to investment banking syndicates, meaning the investment banks working on this massive IPO. Now, the rest of this S1 document explains the business model and the financial statements in a lot of detail. And please think of the S1 document as being like an annual report on steroids, as it's very thorough. Now that the S1 is done, what's next? Well, an investment bank has many departments like investment banking, equity research, sales, trading, etc. And when you see a trading floor on television that is not the stock exchange, it's often the trading floor of an investment bank like Morgan Stanley. I almost said Goldman Sachs. Now, an employee of the investment bank called Equity Capital Markets, or ECM, summarizes this entire S1 and creates what's called a 20-page sales memo. And ECM, meaning equity capital markets, what they do is they teach the salespeople that sit on the trading floor at the sell-side investment bank how to sell the deal to their buy-side clients. And ECM stands on what is called an ethical wall, and the people on the trading floor don't go to the other side of that wall, which is where the investment bankers sit. Why? Because the investment bankers have insider information on companies. And ECM is the bridge between the investment bankers and the traders and salespeople on the trading floor at investment banks. Now, when ECM explains what the IPO is all about to the folks on the trading floor, they will do so in what's called a teach-in session. And they explain what Ice Juice is, who the competition is, who the management team is, what are the financial statements, how to value the company, etc. And they usually value the company using 3 different valuation methodologies, including discounted cash flow, also called DCF, and some form of price to earnings and price to revenue multiples. Why use 3 valuation methodologies? Because when the salespeople on the sell-side trading floor call their hedge fund and mutual fund buy-side clients, different types of clients look at different valuation methodologies. Also, if you come up with a target price for a stock based on 3 valuation methodologies, then you can take the average target price for the company of those 3 methodologies that you're doing research on in order to minimize the margin of error with one of the valuation methodologies, which is usually DCF. But the reality is that salespeople on trading floors are so busy that they often just look at the cover page of the sales memo that ECM creates. And if the salespeople email or give that sales memo to their buy-side clients, they can easily lose their jobs, and compliance is a massive deal, especially with IPOs. Now, the next step is the salespeople on the trading floor start calling their buy-side clients, meaning hedge funds and mutual funds, in order to sell the deal. And salespeople have their own territories to sell to. One person might sell to buy-side firms in the greater New York area, like this salesperson here whose client is Axe Capital. And another salesperson on the trading floor might sell to clients in Boston, like Fidelity, Wellington, or Putnam, for example. And the conversation will be very similar to this, actually. So pretend that I'm a salesperson on the trading floor of sell-side investment bank MHS, and I'm calling my buy-side client in Boston using the sales memo that ECM created to sell the deal. Peter, hi, this is Chris from MHS. Yes, that's a very funny joke. Separately, we're taking Ice Juice public, which makes 124 different beverage products. And the total addressable market for the beverage industry is $240 billion. And the market is growing at 13% per year. I'm reading this off the sales memo. Now, the IPO date will be in 2 weeks. And I'm sure you've already read the S-1 filing. Now, we think the company is attractively valued, and the revenue growth rate of the company is 97%. It's unbelievable. And operating margins can reach 30%. I know, crazy high software company type margins, which is unheard of for a juice company. Now, the company, what they do is they sell very expensive premium products that consumers are so brand loyal to. And the use of proceeds from the deal is to open many stores overseas. Now, in terms of the Roadshow, what I'm going to do is I'm going to bring the CEO of Ice Juice, meaning Ira Shermer, to Boston on Wednesday. And please let me know if you want a one-on-one meeting with Ira in your office, or do you want to attend the group lunch meeting with other investors? Or what you can do if you want is you can watch a webcast of the company presenting. Now, the deal is going to be priced between $15 and $17 per share, and there's 600 million primary shares in the deal. Now, do you want to put an order in now or after you meet with management? And I'm happy to use my $100,000 Ivy League MBA skills to set up a meeting with the CEO and bring the CEO to your office where I sit in the meeting and say nothing and pretend that I'm paying attention. It's your call. Wow. You want to place an order right now for 10% of the deal, meaning 60 million shares. No problem. At what price? A market order? Are you sure? It prices between $15 and $17. Okay, a market order it is. Yeah, and what I'll do is I'll thank you. I'll keep you up to date on the pricing. And if you want to speak with my retail analyst to learn more about the deal, what I can do is I can set up that meeting if you want me to. Cool beans, groovy. Thank you and have a lovely, lovely day. Okay, so my client, Mr. Lynch, that I just spoke to, is a portfolio manager at a large mutual fund. And he thinks that the deal is a home run. And he said to me on the phone that he thinks the company is worth $40 per share. So he said, I'll buy the stock at whatever you price it at, meaning between $15 and $17 per share or even higher. And my client is smart enough to know that the deal is hot. And he likely asked for way more shares than he thinks he will get. He probably padded his order. Now, my next step as a salesperson at MHS is I talk to equity capital markets, meaning ECM, and I communicate the order size based on my phone conversation and at what price as well. And this is referred to as book building. And all salespeople at my firm and all salespeople at these firms here on the Syndicate, they give all the order sizes and what prices our hedge fund or mutual fund clients want to buy the IPO at to equity capital markets. Now, MHS is the book runner of the deal, as we are top left right here. So all these other firms tell my ECM team what their orders are. And since we're top left, we make more money on the deal than the other investment banks on the syndicate you see right here. Then what happens is a couple of days or so before the stock starts to trade on the NASDAQ under the ticker IceJ, equity capital markets, meaning ECM, talks to the investment bankers and the management of Ice Juice, and they collectively decide what to price the deal at and who should get what shares in the IPO. Now, in this hypothetical case, there's so much demand for the Ice Juice IPO. In fact, there was demand for 6 billion shares, meaning 10 times higher than the size of the deal, which is 600 million shares. So this hot Ice Juice IPO is 10 times oversubscribed. In terms of what to price the IPO at, meaning $15 up to $17, there was so much demand at a price above $17 that the investment banking syndicate decided to price the deal above the high end of the $15 to $17 range. And so what they did was they priced it at $18. So the company will now get more than $9.6 billion after fees from the IPO, and the bankers will get paid more. And capitalism is a wonderful motivator for equity salespeople. And this is where it gets really stressful and contentious for salespeople on the trading floor, because their clients are going to be really upset that they won't get nearly the amount of shares that they asked for. And the difference between the sell side and the buy side is the buy side calls you a jerk to your face, but the sell side hangs up first. It's true, sort of. Now, later on in this video, what I'm going to do is I'm going to explain the different roles of employees at investment banks, the buy side, and even venture capital firms, so you can decide what role might be best for you in your career. Let's talk about how the bankers and the management of Ice Juice decide who gets more shares in the IPO. Well, first of all, management of Ice Juice wants investors to buy that are very long-term shareholders. Why? Because they don't want investors to sell the shares of the IPO on day one. And the management of Ice Juice and the investment bankers want to sell the IPO to investors that will hold the shares or even buy more shares after the stock starts trading on day one. Now, the biggest nightmare for the investment banking syndicates and the management team of Ice Juice is if too many short-term focused hedge funds or mutual funds flip or sell the deal right away to make money, because that will drive down the value of the IPO and it will break its deal price. Now, there are long-term focused hedge funds like the Tiger Cubs that are less likely to flip the deal. Please don't get the impression that all hedge funds are very short-term focused. Now, how do we know who will sell or flip the deal on day one? Well, by law, if a buy-side firm manages more than $100 million, they have to file with the SEC every quarter what stocks they own. And we can look at the SEC filings of large buy-side firms to see if they have flipped or sold IPO shares at the end of a quarter. Yes, there are ways around this. Now, another way for the management of Ice Juice and the bankers to know if the buy-side firms won't likely flip a deal is based on the quality of the meeting that the company had with investors during the roadshow. For example, when I worked in the hedge fund industry years ago, we got the largest or near largest allocations in 2012 on the West Coast for Splunk's IPO and ServiceNow's IPO. Why? Humbly, because I did the work and I created my own detailed financial models of the companies, and I articulated in the meeting with management that I think the fair value of the companies are much higher than the pricing of the deal. I also asked questions about future growth opportunities for the company, and I gave the correct impression that the company would dominate from a platform computing perspective in the long run. Now, the best investments are platforms where you own the road, like Apple does with iOS, and you charge the cars a fee to use your road. I even went so far as to create my own mock-up web interface of what a Splunk platform might look like in the future. And I read every single word of the S1 as well. And I asked thought-provoking questions like this. What would you say is the most misunderstood aspect of your business model by potential customers? That's a great question. CEOs love to hear that. Yeah. And I'm also interested to hear their answer. Now, what some hedge funds and mutual funds do in an IPO is they buy the shares the day of the IPO from the syndicate of bankers, and then they flip, meaning they sell the IPO shares on the first day of trading through another sell-side firm that's not on the syndicate here. Why sell through another firm? Because if the hedge fund, for example, sells shares through one of the firms here on the syndicate, then they won't get many shares in the next hot IPO. Now, the second way that bankers will decide who gets a big allocation in a hot IPO is whatever firm trades a lot in general through the sell-side trading firm, meaning who pays the most in commissions. And I can't disclose the name of the firm that usually gets a massive IPO allocation, but it often rhymes with Ridelity. Now that we know the price of the Ice Juice IPO, which is $18, let's see how it performed out of the gate when it went public on day one.
And they're off. Ice Juice trading under the symbol IceJ, already pushing north of 20.
Crack 25.
Now, the IPO is red hot and priced at $18, but quickly ran up to $25 because the buy side thinks that fundamentals are amazing and the company shares are worth way more than $18. Now, many IPOs go up about 30% on day one. Why? Well, what's the point of a buy-side firm buying an IPO if the company isn't worth more than the IPO price? Hence the discount pricing in an IPO. Now, this Ice Juice IPO was initially so successful that more and more investors bought shares well above $20 per share, including Chuck Rhodes' father right here.
Stock's about to pop to 30, double my position at the market.
That'll tap the account.
If I had more, buy more. This thing is running like Bill Rogers in Boston, fast and long.
Be careful of FOMO with IPOs, meaning fear of missing out, and never buy an IPO with a market order. Always put in a limit order, and please do your research first. So how do you do research on an IPO or any stock for that matter? Well, always analyze the fundamentals of the company and create your own financial model to come up with your own target price. And you can use this template I created if you sign up for one of my MBA degree programs at this link here. Now, always start with analyzing the management team as part of your qualitative analysis. Then move on to the quantitative analysis, like the size of the total addressable market. And this will really help you to not get carried away with forecasting revenue that is greater than the total addressable market. And then once you do your quantitative analysis, then move on to creating the financial statements and value the company, which I teach from scratch in my MBA programs. Then once you've answered the 730 questions I ask you in this comprehensive research document, then you get 3 outputs. The first output is a 1-page executive summary here that you can print out. The second output is a detailed report. And lastly, a dashboard based on your answers. And on each tab, I have a YouTube link to explain each of the 100 steps on these tabs in a lot of detail. Now, you can create your research report and your target price partially based on what you read about in the S1. And please make sure to read the entire S1 and pay particular attention to the risks mentioned by the bankers and lawyers in the S1 as part of your investment research process. Now, when the stock hit $30 on the first day of trading, Bobby Axelrod hired somebody to put poison in the juice.
The stock is running. When will you do it?
Soon.
Now, I'm shocked that this happened because the label has this written on it right here, but I'm not going to be drinking this. And right before people got sick, Axe Capital did this.
We're short a name.
Maybe I'll get in on this. Anybody betting it won't turn?
No, ma'am. This is a red light short. Axe doesn't get positions this size wrong.
In reality, of course, this would not happen, but I've heard that some corrupt hedge funds might have hired actors to line up at mid-cap banks in New York City in the fall of 2008 to make it look like people were lining up to take their money out of the banks. And for more details on how a short works, please refer to this video here, and the link is in the description of this video. Now, of course, the stock of Ice Juice started selling off after the media picked up the breaking news of poison in the drinks.
The stock was getting pummeled so badly, they halted trading. Smart money's fled to safety, and when that happens, the bottom drops out. When trading resumes, the deal's gonna break. That's when you go below the original deal price, and that's an unmitigated disaster.
Accurate. The exchange will halt the stock and suspends trading when massive volatility is expected, and usually with breaking news events. And Axe made a fortune on the stock.
Ding ding. Closing price $3.89. Stillborn. Ice J, fresh squeezed chapter 11 in this future.
This is one busted ass IPO. Let's crack open that bottle.
Now, if Ice Juice goes belly up, then Axe might never have to cover his short. And so Axe wins in two ways. Number one, he made bank on the short. And number two, District Attorney Chuck Rhodes and his father lost a fortune on this IPO. But in this episode, we have the greatest twist and ending of any show ever in the history of television. Genius writing. Chuck was in on it and caught Axelrod's guys that put poison in this. And it certainly fooled me as well, given this label. Yeah. My dad humor's awful, I'm sorry. But now that we've introduced a number of different finance rules in this lecture, including investment banking, equity capital markets, sales, research, etc., I made this very short video here in my course called the Complete Financial Analyst Training Course that explains the roles or job functions in finance. And a link to that course is also in the description of this video. There are many different financial analyst roles, from investment banking to hedge funds to venture capital to private equity to trading to sales, etc. There's many of them. And in this course, per the images below, I'm going to go through 14 different financial analyst roles. And so what we're going to do in this portion is I'm actually going to go over just the top 7 of the 14. And we'll build on this logic very slowly so you understand what some of the basic daily tasks are for these 7 analysts you see in front of you. And I think you'll enjoy this session. Again, we're going to build on this slowly. And so let me just kick it off with a quick animation on what these roles are. hope you enjoyed that. Now, Franklin in that video is a good friend of mine, and he worked for Obama in the White House and actually launched his search engine, Oh I Get It, years ago. Now, the way I teach is different, and it's based on my experience. Now, before I rate the current episode of Billions here with a buy, hold, or sell rating, here are more details about my complete financial analyst course, where I teach you how to get hired in any finance role and how 14 finance jobs work, and accounting and finance and investment banking from scratch, and so much more. And the link to the course is in the description of this video. Welcome to MHS. Congratulations! MHS stands for Morgan Haroun Sachs, which is the world's #1 pretend finance company. Come with me. You will go through our Financial Analyst Training Program Bootcamp. Here you will learn a lot about finance and investing, with no theory. You will rotate through the many divisions of our firm, and we will discuss how to excel in 14 different financial analyst roles. I will also help you understand which finance role you're most passionate about, and how to get hired and promoted in the industry. You will deal with the employees and clients of our firm in edutaining, meaning entertaining and educational interactive case studies, including how an IPO works, how to manage risk, and how to manage a portfolio. You will create incredible investment research reports that will impress the heck out of anyone in the finance industry. This course is for anyone who wants to be a financial analyst, or a better investor, stock picker, portfolio manager, and more. No prior experience is necessary. It includes a comprehensive Excel template to help guide you through our training program. In addition, I will teach you Excel skills so you can model financial statements and value companies from scratch. This course is based on my many years of experience. I'm an MBA graduate from Columbia University. I've gone through the Global New Hire Financial Analyst Training Program at Goldman Sachs in New York, London, and Tokyo. I've worked for top hedge funds, and I even started my own hedge fund and venture capital firms. This course is more than 22 hours long. This is the most thorough financial analyst and investing course available on the market. The student reviews have been amazing. Welcome to the Morgan Haroun Sachs training program. This will be a lot of fun. I'll see you in the morning. I absolutely love this episode. Now let's talk about grading on this episode for Wall Street Realism with a buy, hold, or sell rating. The episode did an awesome job of explaining the anatomy of a hot IPO and how emotional it can get on the first day of trading. And the episode also correctly showed that the stock would be halted on material news. Now, although some of the details in this episode, like the extreme volatility of the stock on day one, are exaggerated, the ending had such a brilliant twist, and I have to give this episode a buy rating because of that. Now, please subscribe, and I will see you soon in our next reaction video when we react to Season 2, Episode 12, which is the final episode of Season 2. Thank you.